All right, welcome back to economics. We're chapter 14, talking about government sources of revenue. We started in our first video talking about where does the federal government get its money from. Largest portion is federal income tax, both coming out of your paycheck or the difference between income and expenses in sole proprietors and partnerships, that is. You have a chunk taken out of your paycheck and Social Security tax. Your employer kicks in a chunk. You each kind of cover half. Corporations, since they're their own legal entity, they have to fill out their own tax returns. And then the government will borrow money if it has more spending going out than it's got revenue coming in. Federal level of government will then take a chunk of that money and then divvy it up to the states, called intergovernmental revenue. It's about a third of where, in our case, Minnesota gets its money to operate from. State income tax is about a third of where Minnesota gets its money to operate from. And then you have sales tax and a few others. Right? And these don't always add up to 100%. There's other little taxes, but we're looking at the big 3, 4, or 5 sources of revenue for each level of government. So federal income tax, Social Security, corporations, and borrowing is where the federal government gets it. Intergovernmental revenue, right, a chunk of the pie from the federal government going to the state, plus state income and sales tax. And then again, the local level of government is going to get that chunk from the state, which is called local government aid or intergovernmental revenue. It's about a third, at least in our Wright County, Meeker County area. Property tax is about half. And then charges for services. So that's where we get the money from. But how do they get the money is a different question. So we got kind of our T-chart here on how much did you pay and how much should you have paid. Starting with how much did you pay, first thing you do when you start a job is you fill out some paperwork. And the first amount of paperwork you fill out is something called a W-4 form. And that W-4 form is going to tell your employer how much you want taken out of your paycheck every 2 weeks or twice a month or however it is you get paid, right? You tell your employer, take this much out. And you don't tell them a dollar amount. You tell them, I want a withholding allowance of a low number like a 0 or a 1, or I want a bigger number like an 8 or a 9 or a 10. The lower the number, the more they take out of your paycheck, right? Your employer takes it from you, holds on to it, then they send it to the IRS or send it to the Minnesota Department of Revenue or Social Security Administration or whoever it happens to be. So you do this from January 1 all year long, and at the end of the year, you've kind of finished up your fiscal year. We just finished up 2019, and your employer will send you a document. They're going to send you something called a W-2 form. And that is how much did you pay. Usually you'll get it end of January, and it'll talk about all the money you've earned, not necessarily what you took home, but what you earned compared to the taxes that have already been paid, almost like prepaying your taxes. You then have until normally April 15th to fill out something called a 1040 tax return. This says how much should you have paid. What was your fair share of federal income tax? So if we look at our situation and we say, all right, Mr. Clem had $5,000 taken out of his paycheck or paychecks over the whole year. And when I'm done with the end of the year and I add up all my income and credits and deductions and all that kind of stuff, my 1040 form says my fair share was $6,000, right? Well, I should have paid 6. I did prepay 5. I still owe the government some money. I'm going to write a check for $1,000. Or if you run into a situation where maybe my fair share was $4,000, Well, I paid too much, right? And I didn't know exactly the amount that was my fair share, but I ballparked it, and over time I'll make some adjustments to my W-4 form and say withhold a little more, withhold a little less, because in an ideal world I'd like to get it pretty close to even. But hey, I paid too much. Government owes me some money. They're going to send me back a tax return. Now, in theory, I can make a choice and say, you know what? It's my money. I want to keep all my money as long as I can keep it. I'm not going to have a dollar taken out of my paycheck in federal or state income tax. Okay. So starting January 1 all the way through December 31st, I don't pay any federal or state income taxes. Fine, good for you. You get to the end of the year, your W-2 form says, yep, nothing in federal, nothing in state. Okay. My tax return is due on April 15th. So on April 15th, I got to be able to cut a check to the federal government in this example for $4,000. Now, if I can plan ahead, maybe that's an option. I'd argue most people don't. I'd argue most people aren't disciplined enough to take the money that was earmarked for federal or state income tax, hold on to it, and then send it. The federal government doesn't want that either. Right? The federal government doesn't want to wait until April 15th to get everybody's tax dollar. Pretty tough to run the government that way. No different than me saying, hey, I'll pay you 50 grand a year to work for me. You're like, sweet. Well, I'll pay you on December 31st. So you find a way to live from January 1 all the way to December 31st, then I'll pay you one big check at the end. You're like, what do I do in between? Well, that's your problem, right? You figure it out. You would counter and say, well, how about you pay me the $50,000 today, January 1? And I go, well, I'm not going to do that because there's no guarantee you're going to get all of that work done for me. You may quit halfway through, and how do I get my money back? So we pay you kind of every 2 weeks or monthly as our example there. Well, the government's kind of the same way. Government's going to want a chunk of that tax dollar being held from your paycheck, sent to the government so they can run themselves, and then you kind of divvy up at the end with whether you paid enough or didn't pay enough. Okay. Let's move on to page 400 in the textbook. Let's take a look at some other ideas as it pertains to taxes. So if we were in the group, we would hit the pause button and say, hey, tell me everything you know about taxes, all the different kinds of taxes, what's the use for. We have 3 criteria for tax. First one, is it equitable? Is it fair? Right? Should everyone pay the same dollar amount, or should everyone pay the same percentage? Okay. Ultimately, you decide what's fair because you vote on our elected officials once you turn 18. They're the group that then kind of says, well, here's what our tax policy should be. So indirectly, you decide what's fair. And if you don't like how it's going, then you let your elected official know, I would like it done a different way. You either do or don't get my vote, and they may or may not make some changes. But 3 criteria for tax. First one is it equitable? Is it fair? If people think it's fair, they're more apt to be okay with paying it. Second one, is it simple? Is it easy to understand? Right? Sales tax is easy to understand. You go ahead and you buy something for $1, you pay an extra 6.5 cents. That's easy to understand. Our tax code is not simple. Okay, it's very difficult to understand. Hence why accountants can get $200 or $300 for filling out your tax return, because it's not simple. It's not easy to understand. But something like a tabs, you've got a car, you pay tabs. A newer vehicle, you pay more. It's an older vehicle, you pay less. Sales tax. Those are simple. Again, easy to understand. Most people are okay with it. They may not like it, but they're okay with it. More people are frustrated with the federal income tax or even state income tax because it's not easy to understand. Our third criteria for tax is it efficient? Is it easy to collect the tax in a timely manner, right? And your payroll withholdings are an example of that. Your employer takes it from you, holds onto it, sends it off to the government either every month or every 3 months, depending on the size of their company. That's efficient, right? If it was you needing to write the check to the IRS every month, that's probably not very efficient, because how many of us would go, boy, we're a little tight this month. I don't know if I can afford to write that check to the government, right? So 3 criteria for tax. Is it efficient? Is it easy to understand? Is it equitable, right? Fair does not mean equal. We have a couple ideas, principles of taxation. You have your benefit principle and you have your ability to pay principle. Your benefit principle is more your sales tax idea, right? If you get the benefit of buying whatever it is, you should pay the tax on it. You look at out east, and we don't have it much here, but toll roads, right? You're driving on the road, you're using up the road, you should have to pay for the using up of the road. So every driver's got to drop in how many ever bucks in the toll booth as they drive on by. Okay, that's a benefit principle idea. Ability to pay is more like our income tax system. Whether it be both on the corporate side or on the individual side, the idea is if you make more, you should be able to pay a little bit larger portion. Now, again, is that fair? Is that, somebody else makes that decision, but, you can vote and say, well, I don't think that's fair, right? Should everybody just pay a flat tax of 10%, right? 10% of your paycheck goes no matter whether you make $1,000 a year, $10,000 a year, $10 million a year. Okay, that's simple. Is it fair? Well, a disproportionate portion of those taxes, you take $1,000 out of someone who's making $10,000, that's a pretty big chunk of what they used to live on versus the billionaire who's making $10 million a year. Hey, I'm going to take $1 million of your 10. Well, that's a lot, but that person's still got $900,000 to go buy whatever. They'll still buy a lot of things versus taking up 1,000 of your 10,000. That's a pretty big portion. Now, again, I'm not arguing right or wrong. I'm just saying that is our situation. Ability to pay, our example is our income tax. Benefit principle, better idea is more like your sales tax. You have some taxes that are proportional, meaning it's a set percentage. Your Medicare tax, you take a penny and a half out of every dollar. It doesn't really matter how many dollars. Everybody's going to get this amount of tax taken out of your paycheck. Is it a progressive tax like your income tax structure where it just keeps going up? You earn this much money, you pay a set percent. If you earn a little bit more money, your percent is a little bit higher. Or is it regressive? And again, regressive is you just get a flat tax or a flat fee to, say, purchase a vehicle. And if you earn $50,000, that is a certain percentage of your income. It's 3% versus if you're someone who earns $250,000, that's only 0.6%, right? So 3% versus 0.6%. And some would say, well, again, that percentage of tax is going down the more money you make. Let's go ahead and stop there and we'll move on to some government expenditures.